Today, there is something we take for granted. We pay with our phones. We transfer money instantly. We take loans. We shop with a simple card tap. It all feels ordinary. Almost invisible. But there is one question worth asking. What would happen if, tomorrow, all the banks in the world simply disappeared? People would lose access to their money. Trade would slow down. Businesses would stop functioning. Even entire states would face serious economic disruption. Yet the most surprising part is this. Banks were not always banks. They did not begin as massive buildings. Not as digital systems. Not as global institutions. Their story begins with something very simple. A wooden bench. Let's step back in time to medieval marketplaces. The world was very different then. Each kingdom had its own currency.
We take for granted.
Every ruler minted their own coins. Merchants traveled from city to city, from country to country, carrying goods and trading across long distances. But they faced a major problem. Money from one region was not accepted in another. Imagine arriving in a foreign land, trying to buy goods, and no one accepts your coins. That is where a special group of people appeared. Money changers. They sat in busy markets all day, surrounded by different currencies from different regions. They checked whether coins were real or fake. They weighed them carefully. They listened to their sound when dropped on a surface. Sometimes, a single glance was enough. They had trained eyes and years of experience. They were like living encyclopedias of currency. Because of this, merchants trusted them deeply. Most of these money changers worked while sitting on simple wooden benches. In Italy, that bench was called a banca. Over time, people stopped remembering the bench itself and started associating the place and the activity with it. That is how a new word was born. Bank. But this was only the beginning. As trade expanded, merchants began asking these money changers for something more. Not just exchange, but loans. They needed capital to buy goods, to build ships, to fund long journeys across dangerous seas. Their own money was often not enough. So the money changers began lending it. With a simple condition. You return it later. This moment changed history. The first loans were created. Trade expanded faster than ever before. New ships sailed across oceans. New markets opened. Entire cities began to grow richer. Some of history's most important expeditions were made possible through this system. But something even more interesting happened. The money that was lent out began to return in larger amounts. Today we call this interest. For the first time, money itself started generating more money. This idea transformed the entire global economy. But with success came risk. Loans were not always repaid. Not every merchant succeeded. Some people went bankrupt. And some money changers suffered heavy losses. Trust became everything. If people lost trust, the system collapsed. In medieval times, people expressed their anger very directly. Sometimes they would destroy the money changer's bench. And this was not just broken wood. It symbolized the end of their business. In Italian, this act was called bancarotta. Broken bench. Over time, this expression spread across languages. Today we know it as bankruptcy. It is fascinating that a word we use in modern finance every day comes from a simple wooden bench that once stood in a medieval market. As time passed, financial systems became more complex. In regions like Lombardy in Italy, new practices emerged. If someone urgently needed money, they could leave a valuable item as collateral. A ring. A silver cup. A piece of jewelry. In return, they received cash. When they repaid the loan, they got their item back. This system later became known as the pawnshop. Meanwhile, small money changers gradually evolved into organized institutions. The first banks in Europe were established. They stored money. They exchanged currencies. They issued loans. They kept financial records. In 1539, one of the earliest well-known banks in Europe was founded in Naples. These institutions laid the foundation for the modern financial system. Later, people began investing money into banks themselves. This gave rise to shares, to shareholders, and to governing boards that managed financial institutions. The financial world was transforming faster than ever before. Today, we manage our banks from our phones. We transfer money in seconds. We make payments with a single tap. But behind all this modern convenience lies nearly 1,000 years of history. A simple wooden bench, a few coins, and something far more powerful than anything else: trust between people. That trust built the largest financial systems in the world. And in the next chapter of this story, we will uncover another fascinating transformation. How did a simple piece of paper replace gold and coins? How did paper money change the world forever? Let's explore that story together next.